Hello and welcome. Today we are going to be discussing the state of India's economy. We have seen India's retail inflation for the month of October rise to a 14-month high at 6.21%. We've also seen a jump really as far as vegetable prices are concerned. Now many believe this is on expected lines, but many feel that this could also pose a threat to the long term. We've also seen India's industrial output growth really rebounding in a sense. For September, 3.1% growth came in, and so, therefore, what really is the state of India's economy in the near term and in the long term? Well, to explain this to our viewers, I'm joined by Sanchita Mukherjee, senior business economist, Mitali Nikor, senior economist. Thank you both for joining us for this special segment. Mitali, first to you. India's retail inflation rising to a 14-month high. Does this come as a shocker? Was this on expected lines? Your thoughts?
So I think Sakshi, first of all, it's not a shocker. Definitely, the trends were, inching up. We were seeing inflation going up quarter on quarter, and now this data coming in, the retail inflation being the highest it's been in the last more than 1 year. Is not surprising. However, what is definitely interesting in the trends is the rural urban divide, because we never think about, when we think about inflation, we often think about how prices are going up in urban areas. But if you actually look at the rural urban trends, you find that the retail inflation in rural areas is close to 9%, and in urban areas is actually closer to 6%. So what that shows us is that there is a trend with respect to rural areas, actually suffering more from inflation at this point in time compared to urban areas, even though food inflation and food production happens closer to rural areas. And it shows you that they prefer to send their products to cities because they will of course get a better price for it, and they are compromising themselves in terms of the quality of the food and products that they are consuming. Finally, I just want to say before handing it over to Sanchita that you lose elections on inflation. If we look at the US economy and the US election right now, everyone agrees that the election was lost because of high inflation rates. So I think we have to really be careful with our inflation management.
Right, so that's something we really need to be careful with. Sanjita, do you agree? What are your first thoughts on the retail inflation data that has just come in? Vegetable prices soaring, in line with expectations, just a seasonal trend or a seasonal uptick, or would you say that this is a concern?
Thank you so much for having me over, Sakshi. It's always a pleasure. And I completely agree with what Mitali just voiced very nicely. And she mentioned this huge divide between the urban and rural inflation factor, which is very important. Actually, if one were to look at it, I would just add on to what she voiced in terms of stating that the food inflation basket of rural India in CPI is very high. It's 54%, 54 point something vis-a-vis urban 47 something. So it clearly shows that the food inflation in rural India has come in higher than expected numbers, and that's clearly because of the heavier than anticipated rainfall we've had the last couple of months. Now, this is very unusual. We are a country which is a high risk when it comes to climate change effects, and this clearly shows in the food inflation bit, which is completely supply side driven because of the higher than expected monsoons which have driven the prices upwards in rural inflation. Now, coming to feet on street expectation, business economist expectations, most economists are of the mindset that yes, this should ideally settle in November, December, because yes, we've had typically very high inflow of monsoons in August, September months. So ideally, this should settle in November, December. But having said that, let's address the slowdown in the Indian economy, what you just mentioned, and how that is actually happening. Now, there are a couple of, in fact, there are many reasons why that is happening. And this is nothing new. For the last 8 months, one can see that the slowdown has happened because, I think on the fiscal side also the government spending has lessened, and this clearly is reflecting on the cement prices, the steel and all of that. There is a slowdown, so the government capex has come down. It's almost 36% of the budget this year. the first half vis-a-vis last year when the budgeted expenditure, the capex of the government was almost 49%. So fiscal spending has lessened, and this can be attributed maybe to the state elections which are happening. This is also bound to take off now once state elections and all of this is over. I think fiscal spending will start off in a meaningful way. Having said this, I think there is a lot of geopolitical noises also which are happening in terms of the Trump coming to power as US president. His entire rhetoric and electioneering and his body language, everything gives rise to a lot of protectionism which is coming in. So a lot of economies are right now gearing up, trying to understand what actually will be the policy change. Will we be paying more tariff when we import goods to US? How that will affect our MSME segment? All of this is there. And finally, the most important factor contributing to the slowdown in the Indian economy, which again I see as temporary and cyclical in nature, is that from March April onwards, the credit of take has been slowing down quite substantially, because I think prior to this year, the credit offtake was very, very strong. And because of certain changes in regulations, I think NBFC and banks, especially NBFCs and microfinance institutions, lent very aggressively. Now, RBI, being a very strong regulator, rightfully does not want to convert this into bad loans. So they have actually tightened the regulations this year because they want the credit offtake to happen in a meaningful way, not translating into bad loans. So therefore, the loan to deposit ratios of most banks was a concern to RBI. And I think from March onwards itself, the credit input has been slowing down in our economy. Now, I
Right.
think RBI has kept liquidity high. So banks are re-looking at spending in terms of giving higher loans. Real estate uptake has just about started. So I think this is all very temporary and very cyclical in nature. But having said that, yes, we are currently in the phase of a slowdown.
Right. Now it's interesting that both of you mentioned rural India inflation versus urban India inflation. And this also comes at a time when we have seen rural consumption really outpace urban consumption as far as the latest FMCG sector data is concerned.
Yes.
We've also seen real estate figures that came in stronger, like Sanchita was saying. And Mitali, this comes at a time when we have seen industrial output and that growth really rebounding for the month of September. We've seen strong growth in manufacturing, mining, and electricity as well. So then going forward, Mitali, how does one read this growth figure? And will growth, balancing growth and inflation, be a challenge, or do you see this just as a temporary phenomena?
So I think, Sakshi, personally, let's look at the two or three massive challenges that today face the Indian economy. The number one challenge for the Indian economy, and which was clearly articulated in the budget as well, is job creation, right? Because the government is most concerned about job creation. Now, on top of that, you add two, masalas. The first masala is increasing inflation, which is, causing a lot of spice in our dish. And the second masala is our salt, which is, the salt on our wounds, which is reducing growth. Now, what is this dish we are creating? Right, because on one side we have to balance this increasing inflation and reducing growth with the overall priority being job creation. So if you are the RBI, for example, you are being told, I just breached my retail inflation limit, my tolerance limit is 6%, I am sitting at 6.3%. My immediate reaction should be to increase interest rates, right? But if I increase interest rates, it will have a negative impact on economic growth because it will squeeze the monetary side of the economy. It will make loans more expensive. It will also make fiscal borrowing more expensive, right? Because even for the government to borrow, the increase in the interest rate is hurtful. So I am constrained by how much I can increase interest rates. On top of that, on the other hand, if I don't increase growth, my job creation aspect gets affected. And if I cut interest rates, then though I'm adding so much spice to my dish that the dish becomes impossible to eat, because then my inflation will become out of control. So in a very simplistic language, at this point in time, the RBI is in a catch 22. And that's why, if you remember, the RBI had in fact said that they are taking a neutral policy stand, because they need to see where is the inflation trajectory going to go and where is the job creation trajectory going to go. So, in such a situation, I would say that the best course ahead is for the RBI to make a small interest rate increase just to temper the inflation temporarily, and maybe they can even bring it down after one quarter, but just for a quarter, they have to do something, because they have to bring the inflation down into the 6% limit. And at the same time, there needs to be more of a push from the government spending side, because unless you have a fiscal stimulus, which actually stimulates the rural economy. I mean, you mentioned that we have some green shoots of, rural consumption increasing, but a number of other, FMCG may be increasing. But if you look at auto sales, if you look at two-wheeler sales, which are also leading indicators for consumption, those are actually not increasing. Those are in fact very stagnant. And even during the festive season, people expected, TV sales and electronics goods also to be selling along with automobiles, and that didn't happen. So we have a lot of unsold inventories piling up currently in the Indian economy overall, and especially for the rural areas. So I think we need a targeted fiscal stimulus package for the rural areas, and we need overall a pivotal shift in our long term investment strategies for rural areas. We have to focus on rural infrastructure, we have to focus on agricultural reforms, and we have to focus on climate proofing agriculture. So I think
Right.
that's the path.
That's the path. Sanchita, do you agree that now really is the time for a targeted approach? India's long term growth trajectory really should remain consistent. And so, therefore, these are just near term hurdles that now require a targeted approach. What do you
Oh,
feel
yes,
that the RBI
absolutely.
should do?
Completely. In fact, way more than the RBI, because I agree with Mitali. RBI will not have any headroom after these
Yes.
numbers, which have come, to go for any rate cut, say, even in December, or I see very little chances of RBI having even a rate cut probable in February. But having said that, I have a different view about controlling food inflation, because I clearly see this as a supply side issue, and there's very little one can do on the monetary policy except quantitative easing. So in monetary policy, there are two aspects. One is quantitative easing, one is cost, right? So direct interest rate cuts may not be RBI's prerogative at this point in time with these numbers. But what it can do is keep liquidity very easy with the banks, so that banks can be encouraged to do more lending in a
Yeah.
situation where lending is tight, because this is completely supply side driven. Having said this, the major push, in fact, crux of what Mitali just mentioned, it has to be a fiscal spending. We are 36% fiscal spending of the budget. This can clearly go up. Investment further into power sector, right? Building more power plants. This is already happening. In fact, a lot more can be done on this front through PSU arms. Power sector reforms, infrastructure spending, targeted rural infrastructure spending, focusing on affordable housing, real estate. These are huge multipliers in the economy. A, they generate jobs. B, it will start kick back the consumption cycle both in the urban and the rural segment. And fiscal spending will spur private capex also, because right now, if you're a promoter and you have to set up a factory, you will wait and watch, because you're not getting the requisite demand, right? The demand sentiment is low in the economy. So the fiscal spending by the state government, spending by the central government, each of the state governments have received huge paybacks from the central governments in terms of GST inputs, right? They should go all out and spend this, especially in bolstering roads, ports, rural infrastructure, so that we are actually not in the vagaries of the monsoons every quarter on quarter, right? This will address the demand, the consumption, and the temporary slowdown in the Indian economy very, very effectively.
Precisely.
All right. Thank you so much, both of you, for sharing your thoughts. Of course, a whole host of suggestions there. So I really do hope policymakers are also watching. Thank you for this interaction.
Thank you, Sakshi.
Thank you.